So finally, Tesla Q2 delivery numbers are out, and well, it was as expected. Personally, for me guys, if you've been watching my videos, I said they're probably gonna do below 250, 248K, around there. But sheesh, they did more than that, 254, almost 255. So that's actually pretty impressive. I'm impressed. Q2 was an extremely rough quarter for Tesla, but they still did that. That's 255, man. That's like half of all of 2020. So that's still impressive, man. That's absolutely impressive. But there is a big but here, unfortunately. We are in a bear market, and okay or expected numbers by analysts, which Tesla pretty much, almost, but pretty much met, is still bad news. So we can probably see the stock price going down on Tuesday, but not a whole lot, maybe about 5%, but I'll talk about that at the end of this video. What I'm more interested to know is what the stock price is going to be from now till Q3 delivery numbers, so the next 2 to 3 months, because that's the time to load up. As you guys already know, if you've been watching me for some time, I'm going all in into Tesla, man, and I've been accumulating as much money as I could to go all in even more in these coming months. So the question now is Tesla now worth investing in? Is it a good time to buy in the cheap, or probably buy even cheaper? Well guys, I'm Curious Pejjy, and I'm a very curious guy. I'm curious to find that exact question. So let's go find out in this graph, and don't forget to smash that like button and subscribe if you haven't already. Let's go, man. So if you guys been following me for some time, I use this chart on a quarterly basis. It's short, it's sweet, it's simple, and it's pretty much right to the point with the details we pretty much need. Just note guys, in this chart, we don't include the insurance, energy storage, and any other income streams that it has. We just include the vehicles and the FSD because that's what the chunk of Tesla is right now. There's more to come, obviously, like robo-taxis and Tesla bots, but at the moment, at this time, the majority of the business is the vehicles and their full self-driving. Anything else, superchargers, energy storage, insurance, is not included here, but they will be once they become more of a significant factor into Tesla's revenue and profits. So you already know we're keeping this chart pretty darn conservative. But if it's your first time viewing my channel, don't forget to subscribe, haha. But I'll go over this chart briefly so you can be up to speed on what's up. So at the top here, we got the current stock price. Right now it's at 680. You know, it's kind of funny because every time I do these prediction videos, the current stock price just keeps getting less and less, and I kind of find that funny. But moving on, we got the vehicles delivered by the thousands. We got the FSD price one-time fee at $12,000. Now obviously, no one's gonna pay 12 grand for full self-driving. Most likely, and I'm pretty sure like 70 to 90% of all customers are gonna opt in for the subscription base, which is like $200 a month. But we don't have that data at the moment, so we're gonna go on by the one-time fee of $12,000. Now, vehicles sold with FSD, it gets kind of interesting here because in 2021, they had about 936,000 vehicles delivered, and there was about 150,000 vehicles with FSD. So doing the math and ratio there, that's about 16%, but I reduced it down to 15% for Q1, Q2, Q3, and Q4. Now, obviously, this is obviously being extremely conservative because at the end of this year, there's going to be almost 1 million people with FSD. So this blows the FSD part of this prediction out of the waters. This is like conservative to the max. So yeah, I'm waiting for more data to come. Hopefully in Q2 earnings, there's gonna be more data with FSD. And of course, if there's more FSD data, with subscription-based monthly, this is gonna change according to that. Then we got the total FSD sales. Then we got the FSD profit margin. I put the FSD profit margin for all of 2022 at 44%. Doing a little bit of the research, it seems like every single year they're gonna increase their profit margins on FSD by 2%. By the time 2031 arrives, they're making 64% off of FSD, which is just absolutely sheesh, but it's realistic because it's literally just software and they just could just sell it. Easy money for Tesla. Then we got the average vehicle sales in the thousands. Now in 2021, each vehicle on the average that they sold was at 50,000. However, in Q1 of 2022, it was at 54,000 because of supply chain issues and COVID and demand and so many other things. But the situation now hasn't really changed. In fact, it's gotten much worse. You guys see here, I put 55 instead of 54. And that's because in 2022 and in Q2, which is the months between April to July 20th, they've increased their prices again. So pretty much what you guys see here, the numbers here that are 55, they're closer to probably 57, probably 58. For sure in Q2, for sure in Q3, Not too sure how Q4 is going to pan out. We hope that we're going to have a better end of the year kind of thing. It's been a terrible year so far, man, but we hope end of the year this year things could be a lot better. But I'm keeping it conservative and saying 55,000 for the entire 3 quarters remaining. Then we get the total vehicle revenue, Q1 revenue in the millions, and then Q1 net income. Now, what I want to point out for Q1 net income is that in Q2, Q3, and Q4, the percentages are a bit different. In Q1, the profit margin was about almost 18%. 17.69%. And that's with vehicles delivered of 310,000. But in this quarter, we did about 60,000 vehicles less. You know, Tesla benefits a lot from economy of scale. The more cars you deliver, the lower the cost price and the more profit margin you have. The less cars you sell, well, the higher the cost and less profit margin. Not to mention, Austin and Berlin are burning a lot of cash right now, so you can expect the margins getting less. Despite the fact that they even increased the prices on the vehicles, it's not gonna be a good quarter. So I dropped it down for Q2 to 15% as net income, Q3 to 18%, and then in 2024 of Q4, 20%. Then we go to the last 3 quarters remaining in the revenue, same thing with the net income. And then the last 3 quarters, including the Q1 revenue, which is this quarter, will give us a full fiscal year pretty much, because we have to justify the PE. If you keep the PE what it is now and just look at it on a quarterly basis, it's going to give you a whole different number. So you have to look at this as a fiscal year, and that's exactly what I did. And this applies to every single quarter. Q2 includes the last 3 quarters before that, and Q3 as well, and Q4 as well. Shares outstanding, as you guys can see, I adjusted in Q2, same as Q1, nothing really has changed. So that changes the shares outstanding for Q3 and Q4 as well, which is better for us. We got the EPS, obviously. Ignore Q2 to Q4. We haven't put numbers yet. They will change. And we got the PE, which we're going to find out as well. I hope you guys are up to speed. You guys understand the chart. It's very conservative, short and simple, and straight to the point. Now, let's get down to the prediction, what's going to happen in Q2, and see what's going to happen in Q3, Q4, and let's see what the realistic price ranges are. If you guys are ready, man, smash that like button. Let's go. So, Q2 of 2022, delivery numbers was 254,695. We get a Q1 revenue of $14.4 billion and then a net income of $2.372 billion profit, which is not bad at all, but could have been so much better, man. I mean, look, if there was no interruption with Shanghai in Q2, they would have done easy 350. Easy 350. Let's look what that would have looked like if we put 350. Now, obviously, the profit margin wouldn't be 15%. It would have been closer to 18%. But keeping it conservative, with the same rate, this is what we get. 350. Which, by the way, that was my prediction. Q2 was an easy 350 for me. But unfortunately, China had to be China. Shutdowns and COVID and zero policy. Anyways, this is what we get. We would have gotten close to $20 billion in revenue. $3.25 billion in net income. That's a big difference. It's a big difference, man. I mean, that's crazy. We would have got that, but instead, doing a little backspace, we got this instead. But that's okay though. We know that Q3 is gonna be monstrous. We know that this wasn't Tesla's fault. And you know what? It's not just Tesla that's gonna be affected. It's pretty much the whole market, man. Anyone who is in China, which is pretty much everybody, they're gonna feel the heat. So it's just gonna be a bad quarter for everybody. Now let's go ahead and find out the PE for this. At the moment, the PE is around mid-80s, I believe, around there. When this news comes out, obviously, I mean, the news already came out, but on Tuesday, we're gonna see more downside in my opinion. I think maybe a drop of 5%. However, I'm not looking for a daily stock price movement because I'm not a day trader, guys. I'm a long-term investor. I like to buy now and come back to it in 10 years from now and just say no to everybody because I have a whole bunch of money and I can do whatever the heck I want to do. Right? So I'm buying for the extreme long term and you guys are too. But most likely the PE or the average, that's what's going to happen in Q2 or any time between July 21st and October 20th, I'm going to give it a PE of 70. Right now we're at mid-80s, so 70 I think is being conservative, and this is what we get as a stock price. $651 per share, which is pretty much what it is around now. I think right now it's at 680. 650, we're not too far, and a 5 to 10% drop is around there. But obviously what I could see the lowest could go in Q2, a PE of 60, because guys, you have to understand that what's going to drag the whole market down, and Tesla as well, is not these earnings or delivery. It's the announcement of a recession plus the earnings coming out that are terrible. These two things are gonna bring down the stock price big time. And then you got the other things, like if inflation is still high, well, that's gonna bring the prices down even more, because that's gonna invite more interest rates to go up even higher. And voila, you're in a bear market, and everything is going bad, and it's gonna keep going down and down. So PE of 60, price around 558. Now, if things get worse, and I don't know how worse things can get really, but if it does keep getting worse and worse, PE of 50, man, 465. Everyone says the stock's gonna go to the 400s. That means the stock price has to fall down to 50 PE. And it's hard to see Tesla to go to 50 PE. It really is hard to see Tesla to go to 50 PE. That's why I say like 60, man, 558. This makes more sense to me. But on the average, I think 70 is a good average to see Tesla. We'll probably see 400s, 500s for maybe a week or two, but then it'll bounce back up because Tesla has a lot of catalysts coming for them, man. Stock split is one of them, although it's not as exciting right now because we're not in a bull market. However, it could be a catalyst, a short-term catalyst. We also have the positive outlook for Q3 coming up, because remember, Q2, everyone was saying that Q2 is going to be really bad, and obviously it didn't come out as great, but it came out as expected. Now everyone's going to be looking forward to Q3, and the stock price can be more optimistic around there. And you also have the potential time for Elon or Tesla to announce more Gigafactories, but I think that's more towards in Q3 than Q2. More towards October to December news rather than July to August or July to October. But we'll see. 70 PE, keeping at 651. So we can expect these prices at around July, probably even early August. Which, by the way, if the stock price goes below 600, I told you guys, I'm probably going to sell this desk and this Bitcoin and everything in my room to buy more shares, because that's going to be ridiculous. Absolutely ridiculous. But hold on. Let's see what the stock price would have been if there was no interruptions. All right. So remember, 350. You guys ready for this? 7-Eleven. I mean, it's not really that much of a higher stock price, but it's more optimistic, I guess, with this PE of 70. But usually PE of 70 at a 350 would not be the case. It'll probably be more towards 80, probably even 90. But anywho, now moving on to Q3 of 2022. You guys already know in my previous videos, 400,000 is what I put for Q3. And we will do a video on predicting what Q3 deliveries will be, but later down the line when we have more data. I'm going to be a bit more bearish and say 390 instead of 400. And with that, we get about a Q1 revenue of $22 billion with a net income of $4.3 billion. Now that's to say the least that they won't have any more shutdowns in Shanghai, because China has this stupid rule that they want to keep this zero COVID policy for the next 5 years. Bruh. You guys already know there's gonna be shutdowns. I don't understand why they can't just vaccinate people with the good vaccines. Just import them Pfizer's, Moderna's, AstraZeneca, get it over with. This zero COVID stuff is not gonna work. We have to live with it. Just a few days ago, man, I had COVID. I had Corona. It's funny. It's kind of funny if I mention it, but I had Corona. I'm feeling a whole lot better right now. If I do sound a bit off, well, you guys know why. But man, we have to live with it now. It is what it is. We have the protection. We have the preventation. We can prevent it now from dying at least, you know? So like, it's very frustrating. So I expect to see more shutdowns from Shanghai, and I just won't be surprised anymore, because they have this zero policy COVID for the next 5 years. But anyways, I put at 390,000 as the Q3 total delivery numbers with a PE of 70 as well. I don't think we're gonna see much of a change in the PE, because the outscope for Tesla is still gonna be huge. And we get a stock price around $823 per share on the average, or the post split of 3-for-1, $274 per share. Q4, in my humble opinion, I think it's going to be a monstrous Q4 if there's no any more interruptions in Shanghai. Because if you guys have been reading the news recently, and thank you for Kairev for sending me emails, man. I mean, these emails help a lot. Shout out to you, my man. But they're upgrading Shanghai, and they're going to be doing north of 3,000 deliveries or production daily, which is insane. Then you have the Austin ramp up. You have the Berlin ramping up, and then you have the Fairmount as well, Fremont. It's going to be a monstrous Q4. And I'm expecting around 445,000. 1.4 million vehicles. I mean, there's some other estimates that said they're gonna do just shy of 1.4, like 1.39. But I think Q4 is going to surprise us big time, which will literally, I mean, look, year over year growth. If they do 1.4 million deliveries in 2022, that's 50% growth, which could have been a whole lot more. I mean, if you put 350,000, man, it would have been 60% if it wasn't for stupid Shanghai. But 50% year over year growth, which is still absolutely insane. They're still hitting targets. But with this number, with a PE of 80, and I'm hoping by then, by end of the year, man, or by the first quarters of 2023, things will look a whole lot better. Inflation will calm down. The war in Russia and Ukraine would ease off a bit. We need some good news, right? And at the same time, if Tesla's going to have a monstrous Q4, they're probably going to end up with a high PE as well. So with a PE of 80, you can see a stock price hitting $11.65 per share, or a post-split of $388 per share, with a market cap north of 1.2 trillion, which is not bad at all. Now, if we're still in a bear market, we can see the PE go down to 70, which could be 1,020, but hey, at least we go back to the $1,000 ranges, right? But the max I can see it though with the PE going to the 90, or if things end up going super bullish for some reason and everything's all good, people can buy more shares, they can do more risky stuff, PEs will go higher obviously, and some of you guys believe that end of this year or end of this quarter, end of Q4 quarter, we can see a PE of 100. That will bring the stock price to $14.57. But putting back to 80, just to keep it conservative. But overall, man, the average that we can see, the realistic price ranges that we can see from this year, at the end of this year, is between 1,020 and 14.57. These are the price ranges that we can expect to see what Tesla could be trading sometime end of the year or the first quarters of Q4. We hope more, but until that more happens, I'm just going to be loading up on Tesla stock as much as I can, man, because it's a fantastic opportunity. Now, obviously, guys, I'm not an oracle. I don't have a crystal ball in front of me to tell you guys what the stock price is going to be on Tuesday, Wednesday, Thursday, Friday. I don't really care what the stock price is going to be on a daily basis. I got my price targets. I got my money ready, and I'm going to pull a damn trigger once I'm ready, once I hit those numbers. Because I'm in it for the long term. It doesn't matter if you buy it at 600, 700, 800, 500. If the stock price is going to be 7,000, 8,000, 5,000, 9,000, 6,000, it wouldn't really matter what you bought it at, because stock price is going to be here and you bought it here. Could be here, could be there. It doesn't really matter. What matters is that you pull the trigger, you invested, you stayed patient, and you didn't let the media scare you to sell everything. Oh, and by the way, I'm not a financial advisor either. So yeah. So there you guys have it. This is what you could expect for what's going to happen in Q2 starting from Tuesday. But the real bombshells are going to come when the earnings come out. That's one, which we'll do a video of that when that happens too. But the major one, the major bombshell, the thing that's going to crash the whole market is going to be the negative GDP report coming this month and the inflation numbers. And the CPI numbers. Yeah, all those scary things, because if inflation comes out higher than expected, more interest rates, more meltdown for the stock market, more better deals for you and me, and just more blood to deal with. But these are the times to buy, to accumulate as many shares as you want as your favorite stocks. The stocks you wanted to buy at the cheap, well, they're happening as we speak. They're happening now, and this month is a critical one. So don't be scared. It's an opportunity. Once inflation comes back down again and things go back to some sort of a normal, hopefully in the next few months or so, you can expect interest rates to get slashed and the stock market go berserk again, as history tells us. But if you guys enjoyed this video, man, don't forget to smash that like button. And if you guys really did enjoy this video, check out this Tesla retirement video. The amount of shares you need now, sheesh, it's absolutely crazy, man. It's an opportunity, especially with the stock price low today and gonna go lower. So check it out. Don't forget to subscribe, guys, and I shall see you guys in the next video. See ya.